Hello, everyone. Welcome to today's live section. If you're joining us for the first time, you're welcome. Today is our very first class in some time now, because I've been very occupied. And today we are treating a very interesting topic called market cycle. So, a brief introduction before we move into what market cycle is all about. Before you talk about market cycle, you should have already been grounded in your trend, in your support and resistance, and your chart pattern. Basically, it's just like the general strategy for all market strategy, whether you're trading trend, you're trading chart pattern, you're trading support and resistance. So, market cycle, it's bringing all of them together. So, okay, so I hope you all can see my screen. So this is a derivative indices. But like I always say to you guys, whichever markets you're trading, it does not matter. Mm, Strategies and everything, it works both in stock market, in forex, in crypto. So you don't need to be selective. Oh, I'm trading crypto, I'm trading forex, or I'm trading indices, or I'm trading stock. Well, as far as chart is concerned and candlesticks are involved, all strategies work. So whether you're trading anything at all, you should be able to read your chart. So it's just like a chart. So market cycle, a cycle, first of all, this is how a cycle looks like. This is how a cycle looks like. Okay, so this is a complete cycle. So here's a complete cycle. So this is what market cycle is all about. So in market, a cycle states that uh, wherever it's an origin of a movement, that for a market cycle to be complete, the price must come back to its origin. So it means if market started moving here, it started moving at a time, it's going to come back to this same price. So that is what market cycle is all about. So you would ask yourself, so there is a possibility that at any coin or price of stock and everything, there is a possibility of it coming back to its price of origin. So that's why there is an uptrend, there's a downtrend in the market. So an uptrend looks like this, a downtrend looks like this, an uptrend looks like this, and a downtrend looks like this. So for a market cycle to be complete, we would have two market uptrend and two market downtrend. So this is an uptrend, this is a downtrend, this is an uptrend, this is a downtrend. If you bring this together, let's say this is split. Now this is split and this is split, like a half cycle. So let me know if I can rotate this out. So okay, so this forms a complete market cycle in the sense like even if you're drawing it in a circular form like this, even if it's in a circular form like this, or you're drawing it in a circular form like this. So you know that when you join these two things together, like when this one you turn it upside down and join it here, it forms a complete market cycle. So that is what cycle is all about. So now it's how about how you're going to uh, see this in your chart. This is not physics or mathematics. This is just it's how I'm illustrating market cycle. So for the fact I'm drawing these shapes does not mean These are what you expect to see in your charts. So these are stuffs that I would like to go on before I introduce my today's class. So as it is, in fact, how would you know a market cycle in your chart? How can you find your market cycle in a chart? So so you should be able to take it easy, and you would know that this is not a, a rocket science. This is just simple things you see in your charts every day, but you never knew that that was a market cycle. And so a market cycle, it's no other thing than support and resistance. So this cycle here, this means that this is an uptrend, this is a downtrend. Again, this is a downtrend, and this is an uptrend. Sorry if my shape does not look so perfect. And again, this is not any of mathematics or anything. So this is just an illustration. So in the sense that your market cycle looks this way, I say two uptrend and two downtrend. That makes a complete market cycle. Whether it's like this or it's in this way. So that makes a market cycle. So let me just quick Google market cycle. So you would see how a market cycle is. So this is a market cycle. This is a market cycle. So this is how a market cycle looks like. This is a market cycle. So it's not a rocket science. So this is a market cycle. An uptrend, a downtrend, uptrend. So it continues. This is how market moves. So when it goes up, it comes down, it goes up, it comes down again. So with this being our market cycle, let me know if I could copy this image and bring it to my chat. Oh, okay, so I couldn't text this image on this chat. Let me try this chat. Okay, so I think I'll be using this. So this is what's your market cycle. It can be continuous as far as it's moving like this. It's moving this way. It's moving this way. It's moving this way. So these are continuous cycles. So, but for a cycle to be complete, it must have this. It's this. This is a complete market cycle. If you get this or you get this, so these two things are complete market cycle. So can be this or this, but even if it continues, it does not matter. So all you need is to find a complete cycle. Once you find a complete cycle, this will go a long way in telling you where the trend is, where the support and resistance is. So in a real life chart, how would you identify this market cycle? So let me quickly go to any chart. I said it before. Okay, I think this is good. So how will you identify a market cycle on a chart? So this I drew here, these are basically support and resistance. So when it comes to a market, so you look at the market, all these are your swings. All these are your swings. Let me quickly bring my parts. This. So these are market swings. All these are market swings. All these are market swings. No matter how tiny it is, even if it's so tiny, they are market swings. For the fact that they are market swings, all these are market swings. So there are a lot of market swings in the market. So these swings are what makes a cycle. So, but for a swing to make a cycle, uh, it will need to appear in this. So for a swing to make a cycle, one, it will give you this. So when you want to mark your market cycle, there is no specific place you find your market cycle in the market. There is no specific place. What you need to do is to mark any support or resistance in the market. Any support or resistance in the market. That will give you a guide to your market cycle. So take a look at this chart again. This is 2 hours chart. So we need to delete this. So mark any support or resistance, either support or resistance you're marking, just like this. This is my resistance. And when you mark a swing resistance, mark the swing support like this. So this is my resistance, this is my support. So how would you check if this made a complete cycle? How do you know if you made this complete cycle? Bring your part. Start. This is the first place you marked. Start from here. Go down to this place to this your swing supports. Okay. If you have any question or you're not flowing with me, you can always drop a comment on the comment box so I would attend to your question. So this is your resistance again. This is your support. This is your resistance again. So these, it's a complete market cycle in the sense that it gave me this shape. A coin moving from resistance to support, support to resistance, resistance again to support, and support again to resistance. So this is giving me a complete market cycle. So remind you, okay, let me mark another support or resist, another swing. This is my swing again. I mark this swing. I mark the support. When you mark a swing support, you mark the low. If you're marking the support, you mark the high. So check if it formed a complete swing, if complete cycle. So this going up like this, coming down here, it gets to touch this resistance again, and it never came back to this place. So this didn't form a complete market cycle. So for a swing to form a complete market cycle, it needs to go from support to resistance, down to support again, down to resistance. The line that is being your guide is this line that you mark. This first line you marked, this first line, this you marked here. If you're marking any swing at all, it can be any swing in between any chart. There is no specific place that you find your market swing, your market cycle. It can be in between any place in a chart. And so if it's, let's say I'm using this, okay, let me delete this. So this did not form a complete market swing. Assuming this market came down to this place again, this will form a complete market cycle. But look at this, from here to here, from here to here. So the cycle didn't say if this support is it's you are not doing it like you're finding a support or resistant like all of them, like the lines touching and all these things. So what it needs to like mark this first thing, as far as this line, this price is touching this place, even if it like let it go beyond this place or go below this place. So it does not matter for the fact that this first place that was your guide, this line must touch or go above it. So likewise this one, likewise this one. So whenever market price comes back to this place, it means that it's making a cycle. So as market is now, let me zoom out. So you see that market is not in this area. So when market is coming back to this place again, you count it as a like one market cycle. So likewise, if market comes down to this region again, it makes a cycle on this place. So there are a lot of cycle in the market. So it's not just one cycle. It depends on an area you pointed out to mark your support and resistance. So, and I'm not using any support and resistance as an example. I'm using as much support and resistance as possible. and it can be any time frame, be it 1 hour, 2 minutes, 1 minute. This strategy works in every time frame at all. So after finding your market cycle, so let me still go down to 15 minutes time frame. So I would look out for my market cycle. So this market cycle can be big or small. It does not mean any swing at all. Okay, look at this one. I marked out this area. I marked out this area. Just these two places giving me my guide. So this market price goes from here to here, down to this place, down here again, down to this place again. So for the first one, this is a complete market cycle from here. So from here forms a continuous cycle, but for this strategy to work, you must make sure that you found a complete market cycle. So on the complete market cycle, you can be able to process the market strategy. So it formed a market cycle formed at this place. So let me delete these stuffs. Let me still paste this here. Okay. So for the guide of people that I don't want to delete this. So let's say I marked any support or resistance. Let me mark this resistance. The support is here. So do I get a market cycle from here? Just take this as a guide. Market goes like this. It goes like this. Is yet to come back to this place or go down to this place. So this is not a complete cycle. Let me take another swing at any place at all. Let me take this swing. So mind you, this line you're marking at your first swing must be touching the end of the swing. Please don't keep it in between your swing. Any swing that you're marking needs to be specified. If it's this swing, if it's this one, if it's this one. So anyone you're marking needs to be specified. So if I'm marking this swing, so where is my swing low? This is my swing low. So I need to check if this formed a market cycle. So price goes from here to here and goes from here to here. And from here, it goes down to this place and it goes up to this place. So what I'm checking is when the time it takes for my market to come back. So this movement went from here up, and when price came down to this place, that is what I considered. And so from here again, market goes up to this place. So I'm trying to make sure that you understand how a cycle forms. It can form in any time frame. So this is my 15 minutes. So let me still go down the chart. Let me mark this swing. I mark this swing. So I mark the support of the swing. This is the support of the swing. So let me check if there is a complete market cycle here. Price goes like this. And even if you zoom out, price is not yet back to this place. So whenever this price comes down to this place and touches this support, it makes uh, a cycle, but it's not complete yet. So for this cycle to be complete, price needs to come down to this point and move up to this point again. But for now, this swing didn't form a complete cycle. So you're gonna leave it and look for another swing. So at this place again, I'm looking for many swings as possible. So let me choose this tiny swing. This is a tiny swing. This is a tiny swing. I said any swing at all. So no matter if it's big or small. So this is a tiny swing. Using your part. This part is like a guide. It's either you're using your part or you're using this drawing tool so that you can be able to mark this, this, this. Okay, price went to this. So this formed a complete market cycle. For the market to make this move, this M shape or W shape, this is the shape you're looking for. That this is what you're looking for a complete market cycle to form. This is what you're looking for a complete market cycle to form. If it's part you're using, this is what you're looking for for a complete market cycle to form. If you get more, there is no problem to it. But the fact is that this upside must be touching the line you marked. This downside will touching the down line you marked for you to have a market cycle. So I'm still trying to teach you guys how to find a market cycle. It can be anywhere. Look at swing, look at a lot of swings. Anyone you marked at all, just make sure that its price is going through it. I marked this as well. So let me check if this formed a market cycle. This is my origin. Wherever that is your origin, you can maybe specify it by numbering it with alphabet. Maybe this is your origin at point A. Sorry. This is your origin, point A. Then point A, it's your resistance. Look for the support. Point B. So this is your origin. So if point A is your origin, then point B, this is the resistance, then this is the support. Please do not keep this line in between like this. I didn't say mark it as a zone. Just mark it at the last point so that you will know when price is touching. Because sometimes in like this case now, some markets might be so tiny that you don't know if it touched this price. So that will affect your analysis when I start breaking down this market cycle. So make sure that you mark the end of this support, and when you mark the end of this resistance, make sure you mark the end of, I didn't say in between, I didn't say mark the body, mark the end of this tail or wick or shadow, whichever one you call it. So but when you're marking it, make sure that your line is at the exact end, so not in between these charts. And again, it's not that I'm looking for, okay, look at these two places. Okay, these two places were so tiny that you might not figure out, oh, if this touched. But if you want to know if it touched, you can still zoom out, and you see that, okay, this touched to this place. So I didn't say join supports together. That is not what I said. I didn't say find supports that are touching each other. No, what I said is find one support, just one support at all. If it's this, okay, or resistant, is either you find a support or resistant. So if this is a resistant I found, if this is a resistant, if this is a resistant, mark it. It can be anywhere. So when you find a resistant, go and find the support. If you find the support, go and find a resistant. So if I found this support, this resistant, then where is the swing support? This is my swing support, or you take this swing support. So whichever one you're taking, make sure that your lines are touching. So in this case, let's take a look. We take a look at this. If this is the support I choose, okay, take a look. See, it was so tiny that this price did not touch this place. So that is the errors that you might encounter when you're making this. So if this didn't touch, so if you're making if you're making your cycle, like you're using this part to check, so this is the first time your price went to this resistance, coming down to this support. You are not marking this because this did not touch. This is the place that you marked. You would mark because this is where the price touched this line. You're checking where the price touched the line. So another side, the price touched the resistance. This is an area you would mark, and the price touched the support at this place. So not this place, but the place the price touched the line. Even if it's touching or going beyond it, there is no problem with that. So for the fact that it must touch, if it didn't touch, then it didn't make any cycle. So now this, in this case, you found a complete market cycle in this uh, movement. So being after finding your market cycle, what would you do? What is the essence of you looking for your market cycle? Now, the reason you're finding your market cycle, it's for you to be able to know where your trend starts from. So you've watched a whole lot of YouTube videos talking about market trend, talking about market structure, about support and resistance. Sometimes when you check some support, after even giving you a perfect breakout and retest and everything, it will fail. Why is it failing? Okay, market is so uh it's in a way that even after reading and watching videos, when it comes to real life application, the same thing you watched and read, when you apply it in the real life market, in the real life chart, it will fail. You start saying that, oh, market is being manipulated, Trump is saying, giving a news, or there is trade war between US and China, this and that. None of that affects the market. Even if it's affecting the market, it must be shown on your charts. So when your analysis fail, don't say that, oh, or maybe people that trade crypto will be like, oh, BTC is moving up or down. That is why my analysis did not play out. Your analysis did not play out because you made a mistake in making your prediction, because there was an error in your analysis. That's why your analysis did not play out, not because there is a news. I always say this: when market did not get to your target price, you are wrong with your analysis. So even if there is a news will only make your market, your prediction to get to your targeted area fast. If you're trading maybe New York section, or maybe CPI or FOMC or employment rate news, so, and maybe your analysis goes south and you start blaming the news, it's not the news. Or maybe it's because this coin is it's a pump and dump scheme, such languages. You don't use such languages if you're a professional trader, because this is a real life activity. So for you to be able to make your prediction, you should think faster than every other person that is in this market. There are a lot of people in the market, but only a few makes profit. And mind you, when you're losing, another person is being profitable. So you must make sure that you are on the winning side at every given point. So when you're reading about market trend, when you go online, you would see a lot of people telling you, oh, when you come to a chart, you zoom out, okay, this is an uptrend. Oh, this is an uptrend. But when you come here, there might be many trend in this area. Yes, quite all right. Looking at this, this is an uptrend. So where is this uptrend starting? Where is it going? So, and the price will start falling, or maybe this is an uptrend. The price will always keep going higher. Then always find a place to long. You might maybe use your Fibonacci tool. You might place it here, and oh, okay, you say, oh, this is a 0.3 retracement, but because I read about using Fibonacci and trend, then this is my 0.3 retracement. So if price touches here, price is going to go back to this place. And when you marked this, you are very, very confident with your analysis. But after a while, price might do something like this and start going like this. And you start asking yourself, oh, what is the problem? Or which place am I going to wait for this? So why is it it reacted here, but it didn't get to this place? So what is wrong with my analysis? Something is wrong somewhere. That is what you need to learn. Because for the fact that this is an uptrend, there are a lot of trend in this place that you don't know. So that is how market works. You don't just know an uptrend by zooming out and you're seeing, oh, this is an uptrend. This uptrend, that is this market going like this, the uptrend might start from here, or start from here, or start from here. You don't know. So being able to know your market cycle will tell you the exact place your trend started. So that is the essence of me trying to find out your market cycle. Your market cycle gives origin of a trend, in the sense that, you see, this is an uptrend starting from here and ending at this peak. Then a downtrend starts from here and ends at this place. An uptrend again starts from here and ends at this place. A downtrend starts from here and ends here, and that is how it continues. So this is how market cycle works. So when you're marking your swing support and resistance, let me show you what the practical Okay, this is me marking my swing support and resistance. So if I want to confirm, the why I'm using this, because I want to confirm if this touched this area. So this did not touch, so the price came down here and it came up here. So I got a complete market cycle in this place. So what it means is that, so let me show you what this cycle means. What this cycle means is that an uptrend, a downtrend started here and ended here. Then an uptrend started here and ended here. This was the last high of that uptrend. Then a downtrend started here and ended here. Then an uptrend again started here, and that uptrend have not ended yet. Look. So this price movement that is going here, this is where the uptrend started. So if you're drawing your trend, this is where you're supposed to start from. So this is one complete trend. This is a complete trend. This is, sorry, get this again. This is a complete trend. Sorry, I'm marking the highs and the lows, so don't be confused with the trend. I'm drawing multiple trends. I'm just trying to tell you that this cycle is an origin of a trend. So this is a trend, this is a trend, this is a trend, this is a trend. So if this price comes back to this place, let's say this price comes back to this place, then you would say that this is a downtrend. If this price comes back to this area that I marked, this particular area, and touches this support, it means that the downtrend started from here. So you can't just picture an uptrend or a downtrend without being able to know where it started. Has this trend changed? How would you know when your trend changed? So when this price gets to this area, you are expecting a trend change. That is what cycle enables you to do. But for the fact that market is up here, the market is still in an uptrend. And the origin of that uptrend is here, because that is this cycle you're using. If you're using another cycle, you can still be correct, but you need to know where a particular trend starts from before you start making your prediction. It's very, very important. Whether you're using your Fibonacci, whether you're using your support and resistance, whether you're using your chart pattern, this is where the market trend is starting. Being able to know that will take you a long way. When you're looking for your reversal pattern, if you're looking for your reversal pattern and your continuation pattern, for people that trade pattern, then a reversal pattern comes at the end of a trend. That is what we are being told. A reversal pattern comes at the end of a trend, and continuation patterns are in between the trend. But when you come to the market, you see a lot of things that look like pattern. You might say, oh, this might be a wedge. It might be a wedge. Let me just quickly make a sketch. Oh, this might be a wedge, and this is a breakout. And when you draw this, and market didn't just, it might just move a little bit and start coming down. It means that this is not a pattern. It's just a market movement. So for you to be able to know where you're likely looking for a trend or you're likely looking for a pattern, you must be able to know the origin of your trend. And if you know market cycle, that is when you know the origin of your trend. This is so simple if you understand the market cycle. So knowing that this is your uptrend, so, and which started from here. So it's only when a market cycle is complete, that is when you start knowing from this last part, that is when you start checking where the trend's from, because this is the last part of the cycle. the market to make this move, this, making this move, this, and this, and this. So this is your market cycle. So now you have been able, if you've been following me, you can now tell where a trend started. So let me go to another time frame. Maybe 1 day. Let me go to 1 day and check. So this price is moving. This price is moving. So where is my market cycle? Let me know if I could find any market cycle here. Let me mark this resistance. Let me mark this support. So this resistance, I could be able to get this and this. So this is not a complete cycle. So I'll look for another place. So I think I'm seeing somewhere. I marked this place. Let's say I marked here. And I marked the support. I marked the support. This is the one I'm using, this particular resistance. So from here, price went here and went here and never come back here or here. So this is not a complete cycle. So I moved to this resistance, this other resistance here, and I marked the support here. So price came down from here to here, from here to here, from here to here, and from here to here. So this formed a complete market cycle. So I moved the resistance again down to this swing, this same swing. This moved from here to here, from here to here, from here to here, forming a complete cycle, moving again from here to here, yeah, from here to here, and from here to here. So still forming the same market cycle. So I can either use this or I use this. Two of them is correct. So on this last trend, on this 1 day, started from this area. So if I'm drawing my trend on this 1 day, I might be looking out to this. This is likely what I've been looking at. So this is where this uptrend on this 1 day started, from the last part of this market cycle. So I don't know if you get that. It's very, very interesting. So this is where the trend started. So it means that the previous trend ended here. So from here to here, it's a complete trend for the fact that it's in your cycle. From no matter how small it is, even if it's very tiny. So it means from here to here, it's a complete trend on its own. Even if it's little, even if it's big, no matter how it is, it's a complete trend. So if you're making your trend, if you can't draw it from this 1 day, from here to here, you can go to your, maybe your 1 hour chart to be able to mark this trend that is there. I think this is it. So for me to draw that trend on my 1 day, that is what I'm looking at. Okay, sorry. I think it's here. Okay, this is it. This is that 1 day trend. So for the fact that on the 1 day it was not making sense, can go down to my 1 hour chart or any time frame to draw this trend. So this is a complete trend. And this other one going here, it's also a complete, it's also a complete trend, no matter how big or small it is. So I don't know if you're picturing whatever I'm doing. Maybe it might not make sense now, but when you watch this video over and over again, then it might make sense to you. So as price is still in this area, this is your uptrend moving. Now you can always long if it's your uptrend. That is what it is. So when you check this trend, you see the main swing of this trend. Just this last part the market is. So let me still move to 4 hours so I could be able to see the swings. So take a look. So I said that the trend started here. So when you take a look, your major swings on this area, you have this retracement. So if this is good, if a retracement starts happening now and you safely put your Fibonacci here, to this place. Then if a retracement starts happening, maybe price starts coming down from here. I didn't say it's coming down, but if price starts coming down from here, you can now trade your Fibonacci level successfully. When you take your levels here, you make sure that the price goes back to this place. This will be very, very accurate because this is a good trend. This is a good trend. So, but when you do not know your trend and you went and put your Fibonacci 2 here and you pointed it here and you said, oh, this is a good retracement. So when markets was coming, see, when this market was coming down to this place, it reacted here and it didn't go back to this place. Something must be wrong. You are the one wrong because on this trend, this is not a good swing. When you look at how would you know a good trend? When you look, just check the retracements. The retracements will be equal. So since this trend started from okay, from here. So look at this retracement. Look at this retracement. Look at this retracement. So you look at the retracement, they will look the same if the trend is still continuous. So the retracement, they will look the same. So if you want to know if this retracement, when this starts coming back, starts retracing now, and you take the Fibonacci level, there is no way this will not play out perfectly because you figured out the origin of a trend. Not when you go and place your Fibonacci retracement at any place you see in a chart and you expect the price to react at the level that you are looking for it to react. The price will not react at all this level because which swing are you actually pointing at? Where is the origin of your trend? You don't know the origin of your trend. So how would you be able to know the swing that you're going to place your Fibonacci to in? Because you see a market movement going up does not mean when you place your Fibonacci 2, the market is going to react. This Fibonacci 2 is a very, very important tool that when you use it correctly with your trend, you would always be profitable if you want to trade the strategy with this Fibonacci 2. So if you want to trade your chart pattern, let me show you the best and the sweetest method to use chart pattern on. If you're trading your chart pattern, and this was what we marked as our cycle, this place. So this is what we marked as our cycle. So when you're trading your cycle, and this formed from here to here, to this place, so 0.1, 0.2, 0.3, 0.4. So this is a complete market cycle. Now, these are the areas you'll be looking for chart pattern. These areas beyond this place. Those are the areas you'll be looking for chart pattern. Hold on. So these are the areas you'll be looking for chart pattern. This is a secret, but I said I must share. So these are the areas you're looking for reversal chart pattern. At the end of this market cycle, those are the areas you'll be looking for chart pattern. At the end, let's say as price is up there, when price comes down to this place, these are the areas you'll be looking for chart pattern. And this is a guide that if you find the chart pattern here, believe you me, it will be very sweet for you to trade. So when price came here, so this is when the cycle got completed. But it might not form a chart pattern. It's not a must. It might form a chart pattern. A trend might reverse without forming any chart pattern. So on this place, I didn't see any chart pattern here. Likewise here, I didn't see anyone. Okay, so this is where this one reversed. So I didn't see anyone here. Likewise there, I didn't see anyone. So it's not a must you might see a chart pattern, but if you've been opportune to see a chart pattern, you can trade this as easy as, like, very, very easy. Let me check the trade I made this morning. Oh, okay. I think now here. Is it maybe oh, okay. Sorry. So remember I said if you have any question, you should direct it to me. So I'm trying to check the trade I took this morning. Oh, okay. So okay. And I told you, like I told you, it can form in any time frame. It can be in any time frames. Okay. I think was this I spotted. Was it this? Yeah, I think I've seen it. So this was the cycle I traded. Price went from here to here to here to here, making a cycle. So what formed in this place? So when price got here, it's forming a pattern. So and this is the pattern I took this morning. So if it's not clear, I need to zoom. Okay, go down to my 3 minute time frame so I could be able to see this pattern well. So this is the chart pattern that formed here. This is the chart pattern that formed here. So taking this. So this is expanding wedge. If you don't know about your chart pattern, just search on Google. Uh, chart patterns. Okay. You will see a lot of chart pattern. There are expanding wedges. Let me quickly check. So there are a lot of chart patterns. It's not the only the ones you knew before. Okay, I'm trying to check. So there are expanding wedges. Okay, so these are reversal chart patterns. So you see, there are expanding wedges. So this was a form of expanding wedge. So this was a form of expanding wedge. So when I took this trade, it was so perfect. So you don't look back when you see this kind of chart pattern forming at the end of your market cycle. At this down area too, this down area, is this down area. Okay, so there was no chart pattern that formed here. So you can simply ignore. There is no chart pattern that formed here. So you can simply ignore if there is. Okay, now market is on this place. So watch. So look at this. So this being a double top, just look. So this being a double top, look at when you take this trade. It's always so accurate when you find a chart pattern on this place. When you find a chart pattern on this end of a cycle, it's always very sweet. If you do not find, but when you find one, it's always very sweet and accurate. So when you take this trade, even if the target is small, the fact is that whichever time frame, this is just 3 minutes. If it's 1 hour, 2 hours, 3 hours, it's gonna give you the exact same um target So when you find any chart pattern here, that is a very good, that is the most sweetest part of this cycle. But if you didn't find, so currently this is an uptrend. This is your uptrend. Starting from here, this is the current place we are on now. This is the current place we are on. So this is the place we are on. So this is the current place we are on. So that will tell you this, it's uptrend. So currently this trend is okay. It's breaking the upward channel of this uptrend. The market is breaking through the upward channel of the trend. So this is how to trade your market cycle. You see, your chart pattern is here, your trend is here. So I hope you would have to, because maybe I would go live on this again on my next class. I would break down how to trade Fibonacci and this chart pattern. But now I introduce you guys to how to identify your market cycle. That will enable you know the origin of your trend. So this movement from here to here is a trend. This movement from here down to this place is a trend too. So is either when you trade, even when you trade trend breakouts, it works. When you trade anything, so this is a trend. So the market cycle, it's your guide. So watch, if you trade trend breakout, watch this, it will still be correct. If you trade trend breakout, watch this, it will still be correct, right? If this one breaks out, if you trade it, it will still be correct. So this strategy, you got to pay attention to it. Maybe I would redo it on my next class. Yeah, I will redo it on my next class so that you would be able to understand what it's all about. But for now, pay attention and go over to it again, and you would start being profitable in your strategies. So if there is any question, because I'm rounding up my class, if there is any question, you should drop on the comment box, so I would attend to it. If there is none, we should be calling it a day. So tell me if there is any question. So if there is any question, you should be letting me know if there is any. Okay, so far there is no question. So today being a wonderful Saturday. So I wish you all happy Easter and enjoy your holiday and your weekend. So even if you didn't ask any question and you watched this video and you didn't understand anything, please make sure you drop your question on my comment box so we'd be able to treat your question. So that will be all for today. Okay, how would you know the resistance or support to mark first? Now, mark anywhere you see swing in the market, any place there is a lot of swing in the market. There is no particular way to know. The fact is that when you mark, if it's this resistance you're marking, make sure you're marking the supports or this support. Let's say you mark this and you marked this resistance, mark your support. Then you check, this is a movement from here to here, from here to here, from here to here. So this did not form a complete market cycle. So if I'm marking this area, there is no particular way to check to know the particular support and resistance you're marking. Just mark any one that comes to your mind, but make sure it forms a complete market cycle. This went from here to here to here to here to here to here. So this is a complete market cycle. So this is a complete market cycle. So there is no particular way to know how long will it take a chart to get a complete trend. There is no way you would know when a chart wants to get a complete trend. But if you are able to study a trend, you would know when the trend wants to reverse. You would know when the trend wants to reverse. If a trend wants to reverse, they will start making lower low. If this is your trend, if this is your trend, if this is your trend, go to my first video, you'll be able to see, or like one of my videos, I treat about trend reversal. This is the only time you know when this makes the first low or makes the second low. That is when you know that your trend wants to reverse. But you won't know how long a trend might be. It's not in your hands to determine. As far as the coin is in an uptrend, the market will continue going up, 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 up. You don't know the target until it gives you a sign of reversal. If it didn't give you a sign of reversal, it means the market did not want to reverse. So a trend, as far as a trend have exceeded this line of cycle, it can continue going up. But when it comes to this line of cycle, let's say market comes down here and start forming a reversal chart pattern. Now, with your reversal chart pattern at the end of this cycle, we give you an insight that your trend wants to change. That is why it's called reversal pattern. So if it's your reversal pattern coming to the end of this trend, then you should know that your trend wants to end. But if it's exceeding this area, there is no way to know the target of your trend unless unless it's coming to this cycle. If it comes to the cycle, that means you would be able to know the end. If it didn't come to this cycle, it can just be a continuous trend. So mark any support and resistance, any support and resistance. So even if it's this long one I'm marking, this is a resistance and this is the swing support. So even if it's this I'm marking, make sure it forms a complete cycle. Now take a look. The price goes from here to here, here to here. If price comes down here, fine, comes up here, it forms a complete cycle. No matter how large the support and resistance is, you can use anyone. Make sure when you mark the upside, the resistance, mark the support. That is just it. And so if I answered your question correctly, you should let me know. If you're still confused, you can still ask more questions. I'm here to clear you on any difficulties or confusion you're facing. So well, the rule is that the price must touch this area. 1 touch, 2 touch, 3 touch, 4 touch, 5 touches. So touching here is either it forms a W shape or an M shape. That's how you know your complete cycle. So if there is a small question you should ask, because I'm already rounding up this class. If there is none, we'll call it a day. Okay, so we'll just try this. Maybe because I'm still talking about it, when you rewatch this video over and over again, you might be able to get a clue to whatever I'm saying and put it in practice. Put it in practice, then you should be able to know better when to draw a cycle, and it works on any time frame and at any given point in time. So just make sure that you are applying the rules correctly. The lines touching and it's making a complete cycle. So that will give you a complete. Once you get a complete market cycle, you can trade along with anything that comes in between the trend. So I guess that's all for the day. And thanks for joining us today. I hope you have you around the next time. Have a wonderful day and a wonderful celebration too. Thank you.